The broadcast is now starting. All attendees are in listen-only mode.
Hey, good afternoon, everybody. It's Mike from Orderflows, and welcome to today's presentation on taking advantage of unusual order flow activity. Today was a very interesting day. We opened up last night, went higher, and then the rest of the morning sold down, and later in the afternoon we rallied and basically closed on our highs. So it's an interesting market environment that we're in. And what I want to talk about today is some of the interesting things. I said unusual order flow activity, but I don't want you to think that it's like something backwards, like oh what this doesn't make sense, that is so rare. No, what I want to show you, I'll explain to you what is unusual order flow. I'm going to talk to you about the best tools to use to see the unusual order flow, finding hidden trading opportunities in that unusual order flow, and how you, the average retail trader, can take advantage of unusual order flow activity. And again, just really briefly, for those that first time to one of my presentations, my name is Michael Valtos, and for the last 5 years, I've been the owner and trader at Orderflows.com. That's my company that I set up after I left JP Morgan, where I was there for 8 years. I was vice president of futures trading. And before that, I spent 4 years with the big commodity trading firm Cargill. Right? I was a trading desk manager. I worked in Chicago, and eventually I moved out to Singapore to set up a trading desk there when the exchange closed the trading floor. And prior to that, I spent 3 years at Commerce Bank in Chicago as the licensed Eurex trader. I was only one of a handful of traders in the United States that was licensed to actually trade the Eurex contracts like Bunds, Babel, Schatz, DAX, Euro stocks. And in those days, you either had to go through a broker, or unless you had a license from Eurex, you weren't allowed to trade it. And we had our own terminal in the bank, and I was literally one of a handful of people that had that license, was able to trade it. And before that, I spent a couple of years at EDF Man, which is also a big English commodity trading firm. They trade everything around the world, just like Cargill. EDF Man started in the 1700s as a sugar trader. Prior to that, I spent 3 years at Dean Witter Reynolds. I started on the CME floor as a runner with Dean Witter Reynolds. I started literally at the bottom in the industry. I mean, I realized that this is the industry that I wanted to be in. How do I get started? And in those days, there was a trading floor that you can go down and get a job literally at the lowest rung and work your way up, which is what I did. I left the floor after about a year and a half, and I went to trade on the upstairs trading desk when electronic trading started taking off with CME Globex, CBOT had Project A, NYMEX had Access, and you know, I just saw that the future was going to be electronic, and I wanted to position myself for that. So, like I said, I left JP Morgan after 8 years. I left there in 2013, and I wanted a way to give back to the trading industry that's been so good to me, right? I had a very successful career, and so I started writing a book on trading order flow, which is what I've learned over those 20 years as trading as a institutional trader. And if you stick around to the end, I'm going to show you how you can get a copy for free. You can download it. You can get the PDF. You're not going to get the hardcover copy sent to you, but the PDF is fine. You can put it on your phone, your tablet, or you can print it up and keep it handy. And like I said, after I left JP Morgan, I started my company Orderflows.com, which is a software, right, that runs on Ninjatrader 8. And the reason why I started it is because I was trading for myself after I left JP Morgan, and I was using order flow, but the tools that were available for the trader was just basic tools, right? I know that computers exist to make your life easier, and I said, instead of me doing these calculations by hand or in my head or on a calculator, let the computer highlight what's happening in the order flow to me. So I created the Orderflows Trader software. Now it runs on Ninjatrader 8. Before it was Ninjatrader 7. It's a volume footprint chart. I didn't invent the volume footprint chart, but I like to think, I sort of took it to another level, right? Steve Jobs didn't create the mobile phone. He created the iPhone, which is a mobile phone at a higher level. And I have 7 pre-programmed order flow indicators in my footprint chart. And the reason I'm talking about this is because, the charts that I'm using in this presentation are generated from the software that the Orderflows Trader software. And again, the big advantage of having an Orderflows software, specifically mine, is because you don't have to do the calculations. Let the software do it for you, okay? This is 2020. Your computer should be doing a lot of the hard work. And, in the past, right, trading software just processed data and packaged it for the convenience of seeing where the market was trading. A simple bar chart where traders could draw trend lines, calculate pivots, plot moving averages, etc. What was lacking in the software in the past is it did not present the data as market information, right? And what do I mean by market information is information generated from the buying and selling that's happening in the market, as opposed to the market opened up here, at 7, traded up to 9, had a low of 6, and closed at 8. Okay, what you want to see as a trader is you want to see, well, okay, yeah, the market opened up at 7. There was some aggressive buying that moved it up to 9. That stopped. It got shut off. Maybe there was some volume up at the high to push it back down. When traded down to 6, but down at 6, maybe the market rejected the trading at 6s, and we closed, sort of unchanged at 8. And, that's important because, as a trader, you want to know what's happening in the market. Now, this is a volume footprint chart if you're unfamiliar with it. And basically what you want your software to do is put it into an easy to read format so you could make informed trading decisions. Now, a lot of the charts that are in this presentation, or actually all of them, just, within the last 24 hours. So you can see, I'm not going back a week, 2 weeks, 3 weeks to find, the perfect chart. I'm just showing you stuff that happened within the last 24 hours, either in the night session, today's session, this is the 27th of May, or yesterday, the 26th. Now, again, I got to go through a disclaimer because, people think that, trading, they could take $1,000, turn it into $50,000 in 60 days. No, you can't unless you get super lucky, you buy an option or something and the market just explodes. But that's not going to happen. You understand that trading involves risk, okay? Past performance, not necessarily indicative of future results, but more importantly, only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Now, order flow, what makes it so important is because it shows the direction of the market. But a lot of people, they don't know where to begin with order flow. And like I always tell people, right? There are 3 basic building blocks of order flow analysis: delta, point of control, and imbalance. And I'm going to talk about briefly what each of those are, just so you have an understanding, right? It's like learning to walk, right? Before you could learn to walk, you got to learn how to balance yourself. And by understanding delta, imbalances, and point of controls, that's going to give you, sort of that foundation so you can start taking those steps forward. Now, delta is the difference between aggressive buyers and aggressive sellers in a bar. Delta is important so you know who is in control of the bar. Now, every bar is going to have a delta. It might be positive, it might be negative, okay? And it's going to appear, on my software at least, on the bottom of the chart. Okay, so you can see some bars have positive delta, some bars have negative delta. Okay, and again, it's the difference in that bar between the net aggressive buyers and the net aggressive sellers. And what's an aggressive buyer is someone that lifts the offer, someone that buys the current offer and buys into the next offer. An aggressive seller is someone that sells into the bid and then sells probably into the next bid. So once you understand that, then you can start to understand, how the markets move. And the next point that I'll talk about is point of control. And point of control in a bar is the price level with the most volume. What you do is you take the volume traded on the bid at a price and the volume traded on the offer at the same price in a bar. And if that price has the most volume, it's your point of control, right? It's no mathematical fancy formula, algo thing that some people, that's like the buzzword nowadays is algo this, algo that. No, it's just basic, simple arithmetic. Every bar has a point of control. Here, I just highlighted a few of them, right? You can see every bar has this rectangle. This is the price level in the bar where the most volume traded. And that's important, right? It's because, most people, when they come to the markets, right, they're just familiar with a candlestick chart or a bar chart, seeing where the market opened, where the market closed. They're not taking into account volume. And volume is very important, as you're going to see later in this presentation. Now, the third thing is market imbalances, and they occur when there are more aggressive buyers than sellers, or vice versa, more aggressive sellers than buyers in the two-way auction. So a buying imbalance occurs when there are at least 4 times as many traders buying the offer than traders selling into the bid, right? Remember, the markets move in a two-way auction. It's 6 bid at 7, right? We don't trade at one price. It's not a fixed market fixing, in the sense like a gold fixing where, they just take all the bids and offers and sort of collate them until everyone agrees and everything trades at one price. No, the markets move up or down in a two-way auction. It's 6 bid at 7, then the 7's trade out. Now it's 7 bid at 8, and then 8 bid at 9, etc., as it's going higher. Now, when you have an imbalance, it means when you have 4 times as many traders buying that offer than selling into the bid when the market is 6 bid at 7. So, if it's 6 bid at 7 and you have, 100 traded at 7, but only 10 traded at 6, you'd consider that a buying imbalance. Now, a selling imbalance is the opposite. It's when there are at least 4 times as many traders selling the bid than traders buying the offer. Now, this 4 to 1, 4 times as many, it's not fixed in stone. You could use whatever level you like. Most traders use 4 to 1, some use 10 to 1, some use 5 to 1. A few I know use 3 to 1. You probably wouldn't use 2 to 1, but you want to find an area where there's more buying than selling or more selling than buying. Now, not every bar is going to have an imbalance. Now, software can highlight it to you, right? You can see here where the red numbers inside the footprint, these are selling imbalances, right? The blue numbers inside the footprint are buying imbalances. Now you're going to have instances where you have multiple, you have like 3 or more selling imbalances stacked neatly on top of each other. That is a stacked selling imbalance. If you had 3 or more buying imbalances, the blue numbers stacked neatly on top of each other, that's what's called a stacked buying imbalance. And when you see stacked buying imbalances, stacked selling imbalances, that's important information as well, because that's going to tell you where there's potential resistance or support in the market. Now, the best way to think of imbalances is, like a seesaw, right? This is an old postcard I love. The market's trying to find balance, but if there's one side is heavier than the other, generally it's going to go in that direction. So, like I said, generally as markets rise, you see buying imbalances. Aggressive buyers are lifting the best offer and looking for the next best offer. Demand is present. Generally, as the market falls, right, as it goes down, you see selling imbalances. Aggressive sellers are selling into the best bid and looking for the next best bid to sell into. Supply is present. Now, one of the interesting things about trading nowadays is I find a lot of engineers, a lot of programmers, people from engineering backgrounds, programming backgrounds, they're naturally attracted to the financial market because they see it as a problem that can be solved, right? They think, they could just use math to solve it, right? Math is never wrong, right? Indicators are based on math, so technically an indicator is never wrong, right? All an indicator does is solve a math problem, and right or wrong, the sole job of an indicator is to solve that particular math problem at that particular point in time, but it doesn't tell you anything about the market. So what order flow allows you to do is it's not asking you to solve, you're not trying to solve the market, it's helping you understand how the market is acting right now. And most of the time, the market does what it's supposed to do, which is facilitate trade, right? That's why markets were created. They were created to facilitate trade between farmers and, sort of risk takers, so they could transfer risk. And what's most fascinating is when the market doesn't do what it's supposed to do and exhibits what I call unusual market activity. And to order flow traders, it's actually not unusual, but it's unusual to the uninformed trader. So what is unusual order flow activity? Well, earlier I was just talking about imbalances, and I mentioned the markets go up on aggressive buying and markets go down on aggressive selling. Well, what happens when the market goes down? When there's aggressive buying, right? Or when the market goes up when there's aggressive selling, right? It's kind of strange, don't you think? So this is a gold 1-minute chart, right? This is from yesterday morning, right? Now, yeah, you can see how the market where are we here? We we hit that low at 905, right? And then we rallied up, right? People will say, well, yeah, you had this pin bar and the market went up. That's what caused it. We had a pin bar here, market went up and then fell over again. You can make these arguments that you had some candlestick formations here as well. Well, that's all well and good, but if, as a trader, you want to understand what's happening in the market. And right at that low in the gold right here at 905, you have a stacked selling imbalance. Now, Mike, you just said when I see a stacked selling imbalance, it should be bearish. Well, yeah, all right. You can see the red bars got stacked selling imbalances right in here as the market was going down. What's happening here is the market opened up, we traded lower, there's still aggressive selling, but conditions changed in the market, right? Now, if you're just looking at a candlestick chart, you're going to say, well, yeah, we closed higher, so, we probed down here, we looked for stops, there's no stops there. Now we're trading higher. You're just guessing, basically, just as you'd be guessing right here, right? Or even right here. But really what you want to be looking for is what's happening in the market by looking at the order flow. So you can see here, right at this low, yeah, you have a stacked selling imbalance, market rebounded up. So price is being rejected down here. The next bar, we got a big selling imbalance in here, 244, right? So what happened, right? This market closed up here at, was at 1711.30, opened up, traded lower. It was met with some strong support in the market. Got through it a little bit, but it couldn't get any further past that support area. Market rallied up, right? Now, there's a few other imbalance reversals. You have one here, you had one here. That's what these red and green arrows are, imbalance reversals, actually. So you can see here, right? You have the imbalance reversal here, 8 against 61. You got a bearish point of control there. Market sold off, right? Came down to where? Where you got imbalance reversal. Market went up, couldn't sustain that move, came down. You got another imbalance reversal, start going up. You're seeing this unusual activity, right? The selling imbalance on the green bar, the selling imbalance on the green bar, 114, 244. These are big volumes for gold, right? If you look at the volume in all these bars, 114, do you see anything over 100? Here's a 104, nothing. Here's 101. Then over here, the next bar, 244. So you got someone actually supporting the market here, buying 114. Another person buying, another 240 here, supporting this market as the market's moving up. Now, in the E-minis, this was yesterday about 12:30. You see the market sold off, right? From, the 11.5 area down to the 08 area. But if you're looking at, a simple bar chart, nothing stands out. Honestly, I can't even, I look at these candlestick charts nowadays, but they really don't give me much value. But if I'm looking at a footprint chart, well, I could see here, right? I've got imbalance reversal right here at the high, right? We have a stack bind imbalance. Okay, that's what you want to see as the market is going up, up. There's a big offer there, market gets through it. Big offer here, market gets through it. Big offer here, market gets through it. Comes off, pokes up, one tick higher through the high of the previous bar before it sells off. And again, that only gets one tick past this level where you're running into these reversal areas. So you get short, right? You're risking what, a point? Short at 11, stop at 12. It only comes up to 11 and 3/4, and sells off down to the 8.5 area. Pretty quick. That's about 15, 20 minutes. And again, what happened, right? There were signs in the order flow of a market reversal. So you have aggressive buying met with aggressive selling. As it's starting to come off, you can see the selling imbalances. But more importantly, all right, if, I understand that looking at these numbers in the bars can be, a little bit intimidating for people. But if you're watching the delta, okay, what's going on? Market is rallying up to this swing high up here. Okay, we get up to 12 right here, 11 3/4. Delta is small. It's 8. It's 8. What's that telling you? And how's the volume? It's average, decent. 1100. Here's 2100. You get up here, aggressive buyers coming in, right? Because you can see the imbalances. So why isn't the market going higher? You got imbalance, 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 right? You got this nice trend line actually of imbalances. Why, volume, sorry, a delta of 8 is telling you that even though we're going here, there's sellers coming in, right? You should be looking, if there wasn't active, aggressive sellers selling into the bid, right? Because remember, delta is the net difference between aggressive buyers and aggressive sellers. So if you've got, 500 people buying the offer versus 100 people selling into the bid, right? That's going to give you an imbalance, right? A buying imbalance. And you're going to look at the delta and you're going to say, well, it's a delta of 300. Instead, you're seeing a delta of 8 and 8. So I know that even though I see the buying imbalances, the aggressive buying, there's also aggressive selling in the bar. It's not showing up as an imbalance in here, like the 449 against 182. Or this bar is a little bit more spread out. But most importantly, in this bar, even though you see this buying imbalance, you think, well, this buying imbalance, the market should be going higher, but there's also strong selling, strong aggressive selling that's hidden in there, right? You only got 8 in the delta. Then the next bar, we poke up one tick higher, close down, again, delta of 8 on volume that's twice as much. So it's telling you people are happy to transact. Trade is being facilitated at this area even though we're going higher, as you go higher, right, you expect the market to keep going higher, right? But what it's telling you is aggressive sellers came in to shut off that aggressive buying that was going on. Now, this is what I call an imbalance reversal. And it occurs early in a bar formation. But what traders get lost on, because they're just looking at simple open, high, low, close bars or candlesticks, is conditions change mid-bar, right? A bar that started out bullish early but changed during the bar formation and turned bearish, right? Or vice versa, right? Maybe a bar started out very bearish early, right? We've all seen these bars. You see these big down candles, and oh my gosh, I get short. But by the time the bar closes, it's a green candle. It's turned up, right? Traders oftentimes overlook that part, right? And that's what makes imbalance reversals so powerful is because it takes that footprint that's left early in the bar, right? At one point, there was very strong buying. You want to know that information. And it sort of splits up the bar in, like, I don't want to say chronological order, but it's basically sequencing the market as time prints, right? Where traders a lot of times fail is they fail to put market context into how a bar forms, right? They're just looking at open, high, low, close, and not the context of the bar's internal fluctuations. So for example, right, here's a mini Dow, right? This is a 1 minute chart from yesterday morning, right? Going up, making, keep going higher, higher, higher. You have this nice stack buying and balance, and the bar closes down. I mean, it's not a red bar, but we close off our highs. Then the next bar, we open up again. We trade up towards that high, but we can't get past this area up here. And then it reverses and comes down. This is important information. If you're looking at the order flow, you got an imbalance reversal going on here. Okay, market just goes sideways before it fell over. It took about 5 minutes before the aggressive selling sort of reappeared and came back in. And if you're just looking at this, you're confused. Okay, well, we hit a high, came off, we come back up here. What's going on? Are we going to go higher? Or are we going to go down or not? It's a bit wishy-washy. But if you're looking again at the order flow, you see here what's happening in the delta, right? You're up here near your highs, and the delta is -1, -8. That's nothing, -1, -8. This is a 1 minute chart. If it had an extra 1 second, this could be a +10, or this could be a -15, or a +15. It could go either way. But if you're watching what's happening in the order flow, you've got a reversal forming up in here. Okay, so you're just looking for some sort of trigger to come in and tell you to get short. The market's not going any higher. Now, the Orderflows Trader chart will highlight this information on a chart for you. Now this is, again, this is the mini Dow yesterday with just the imbalance reversal indicator turned on to tell you where the shorts are, where the selling is, where the buying is. And again, if you're a short-term trader, this is very useful, powerful information, sort of keeping you in step with the market, right? Down, up, down, up, down, back up, 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 and then down, down, down. This is, why you want to use software that is going to help you in your trading. Now, another form of unusual market activity that helps you spot things in the order flow is what I call market sweeps, right? And I'm a big Karate Kid fan. There's that line in there, "Sweep the leg, Johnny," and we used to always say that on the trading desk. When um, sometimes people would call out, "Hey, where's the market in crude oil?" Yeah, you say 77 bid at 78. Okay, just buy me 100 up to 80, sweep the leg. But what a market sweep is, it occurs when a trader buys up through the current offer and the next subsequent offer, or sells into the current bid and the next bids in the book. And this is done on one order at one time. So for example, right, we're all familiar, this is a trading dome. Okay, what is a market sweep? Well, the current market is 29.9775 bid, offered at 29.98. Okay, and the guy, the portfolio manager, will come in and just say, buy me 500 minis up to 29.99. He's not really interested in, okay, well, there's 30 offered at 98, 79 at 70 at 8 and a quarter, 84 at a half, 97 at 8 and 3/4. What he's really looking at, okay, I could get 100 here, 100 here, about 100 here, about 100 here, and whatever's not done, I'll be working a bid there, or maybe someone's got something iceberg. Big traders, they're really only concerned, they're not concerned about these little prices, they're concerned with their average price. So okay, the market is 97 3/4 bid at 98. See, I could buy 500 up to 99. That would give me an average, maybe about 98.45. That's what he's going to book is his average price, and because he knows that his buying is going to help move the market up. That's why traders sweep the market. You know, I do consume a lot of YouTube content from other quote gurus. I don't put myself out as being a guru. I just put myself out. This is what I've learned. Take it or leave it. But people say, well, people are never going to buy through the offer. Well, that's crap. I used to do it all the time. I know hundreds of other institutional traders that do it all the time. When you have an opinion, when a big trader has an opinion of the market, they want to get in as fast as they can without impacting the market. And if the old man here has got 500 e-minis to buy, and he sees, well, I could buy 500 up to 99, it's going to give me an average of maybe about 98 and a half. I'm happy to do it because I'm probably going to turn the market bid 99 even bid. Okay, so sweeps happen very often in the market, and it's nice if you can see when they happen. Now, sweeps leave footprints in the footprint chart, no pun intended. You can see here, right? You got a stack selling imbalance. And one of the ways you can sort of eyeball when a sweep happens is if there's not a lot of counter trade in the sweep. Because what a sweep is, right? You're buying or selling through a level, through certain levels. So there's not going to be time for sort of the counter trade to happen, right? Say the market is 96 bid at 96 and a quarter. The person buys it up to 3/4. They're just lifting all the offers. So in that flight, when your order is being executed, there's not enough time for counter trade. And what the software does, it can highlight to you when there's a potential based on certain criteria when a sweep occurred, right? You see here how this indicating that a sweep occurred here. Now, during the trading day, cash session, 8:30 to 3 o'clock Chicago time, um, there's a lot of volume that goes through. There's a lot of high frequency trading, a lot of retail trading. So sometimes it's a little bit hard to see the sweeps, even though they're going on. It's a little bit hard just because the amount of volume is just so great. And sweeps are a powerful indication of near-term market direction but in very liquid markets, they're going to be hard to see. But at nighttime, okay, sometimes this is why I talk about seeing unusual order flow activity, right? This was last night around just before 10 o'clock, right? There was a little sweeping action happening right here, okay? It's hard to see unless you know what you're looking for. And, it starts off with, obviously imbalances. Obviously, we got a selling imbalance here. People say, well, yeah, you got a selling imbalance. This should be bearish. Well, actually, what's happened, somebody just came in here, bought about 100. It's hard to see. You're kind of trying to determine it. That's why I said long ago when I created my software, just let the computer do the work. Just sort of leave that form of analysis out to me, okay? Because what's happened is someone just came in, swept this up, turned it bid here, right? So you can see 62 is about 30. This is 5, and the reason you have a selling imbalance here, 9 against 23, is because someone just bought it up here, turned it bid, right? Market opened up, they bought it up a half a point, turned it bid here. Some sellers came in, sold that bid. That was a little sweep activity. But look how what preceded this big jump up here, right? We all like to catch these big bars here, right? This is a 1-minute chart. This bar went from 3 3/4 all the way up to 8 1/4, right? There's probably a sweep happened right here. This is what sweeping looks like, where it doesn't retrace back and sort of fill in these gaps. This one probably 22 a certain time in Asia, the market just jumped right up there, right? But you want to get in before that happens, and you're going to often see it in the sweeping activity earlier. Again, here's another one. It looks eerily similar, but you can see it right here. Someone bought the 28s, bought the 21 that was offered here, turned it bid, right? You see the 106 against 62. This time it's not a selling imbalance. Then you can see the points of control lined up right here. You only get through it by a tick, but by this time the person had bought, their 100, 150 contracts, getting ready for this, in anticipation of the market moving up for, based on their own analysis. Okay, there was a sweep up here. This one didn't work out, right? It just sort of went, just sort of backed up on you, came in and filled it up. But when you have a sweeping activity where it doesn't come in and retrace it, it's going to give you an indication of potential market direction. I don't know, people always think that, when big traders got some sort of inside information that, they got an edge over people. No, they do their own analysis. And, and people think that, well, just because someone has inside information, they gotta be trading tens of thousands of contracts. No, this person may have, known something, who knows what, but his contract, his size is only, 150 contracts. So he's going all in, right? Goes all in. And boom, it moves up from 08 up to 14 in the next 5 minutes. Now, if you're looking at a normal bar chart, you're not going to see that activity, right? Again, you have these big moves up. This is last night. You have this big move here. You have this big move here. But what you want is what information is happening right before that move happened, right? You want to be clued into what's going on here before it makes that big move up. Now, another form of unusual order flow activities is what I refer to as small digits or small prints. I used to call them small digits. I sort of changed it over the years to small prints. And what it is, it's not your normal order flow volume, and it's a sign of price rejection or market exhaustion. And it's basically the market's getting to a certain level and trading has dried up. The market's going up, but buyers have been dropping off along the along the move up. That sort of hits its high. There's nobody interested in buying. Nope, sorry, I'm not interested anymore. Some people, I call that price rejection. Some people say, well, the market's getting exhausted on that move up. There's two ways to look at the same thing. And if you're looking at a normal footprint chart, right? This is what a normal footprint chart. This is from this morning, or sorry, today, about 1 o'clock. Years ago, right? Before I came up with my software, this is what I would look at. It's like, gosh, trying to read what's going on. Okay, I could understand the imbalances. I could understand what's happening in the delta, the point of controls. I could understand. But you know what? There's certain things that happen at highs or when you're trading around highs, that is very revealing. And it's one of the reasons why a lot of traders struggle to understand order flows. They don't know what to look for. Right? This is why I teach you this. And it's what I call a small print. Right? You can see here this red box, right? So red box, red box, red box, red box. These are bearish small prints. There's also small box, small box. These are bullish small prints, right? Small, small. And what it's telling me, again, this is nothing fancy, right? This is just the software drawing a box around a print at the extreme that's, you know, within a certain range, right? So this one's 1, right? I think I have this one set to 9. So you can see anything that's a single print, 1, 3, 2, 3, 5, 6, 1. Again, it's not like some algo, like, oh, I got to describe it as some algo. No, it's basically you're just looking at the order flow, okay, and it's highlighting it to me. Now, this is where your part as a trader comes in. You got to put it in context with what's happening in the market. Okay, I hit this high here, okay, and you just sort of go sideways. You hit the next bar, it trades up to this, was at 11 and a quarter, 11 and a quarter, 11 and a quarter. It's not a triple top because your top is here, but it's sort of holding this area. But basically it's gone 366, then 13, okay, then 126, and then 1. Why 1? You know, it's telling me buyers aren't interested anymore at this level, okay? Because if there was buyers still interested, it would trade a lot more than 1. All right, then you see the selling coming in, aggressive selling. 38 is a selling imbalance, 270, that's a selling imbalance. Right, the market closes down. Now, points of control, right? Points of controls are sort of all coming in at this level right here. You got 3 out of 4 coming in at the 10 and 3/4 area. You got one here at 10 and a half, but then the point of control in this bar is lower. It's coming in at 10 and a half. So, okay, well, I see, traders aren't interested in going higher. Only one contract traded here. Point of control is coming in lower, right? I see selling imbalances. Now, the delta, what's going on in the delta, right? Well, we're just kind of going sideways, but delta minus 64, then plus 140 here, minus 52, minus 348. Okay, well, at this point, you have a small print, you have a delta, point of control, imbalances, all telling you, there's no buying interest here, right? We're putting a lower point of control, telling you that people are happy to trade at lower prices. You got negative delta of 348, which is more than minus 52. Okay, so there's more aggressive selling here. You've got the selling imbalances, the 38, the 270, and you got a small print telling you of price rejection or exhaustion. People don't want to trade here. They're exhausted. They're trying to buy it at 10 and a quarter, right? Then the next bar, big negative delta minus 846, 1, 2, 3 selling imbalances in there. Point of control lower. But yeah, you could have got short off this bar, but by looking at the clue was here in the small print, right? That people were tired of trading, trying to move this market higher. They tried once, twice, 3 times already. And on the third time, there was only one person interested, and the market reversed and sold off. It was a quick move from, 10 and a half down to 7. This just happened 1, 2, 3, 4, 5 bars. Now, when a market is going sideways, right? You want to look for clues. Well, which way are we going to go? Are we going to go higher? Are we going to go lower? And, honestly, there was a couple signs here, right? That we came in, we hit this swing low here in this bar at 924. The market went up, got a single print here, you got a couple imbalances. Market came down, didn't really test the low, got within a point of the low. Then it came back up, 5 buying imbalances here. You've got a single print here. Okay, price rejection. Now people are kind of rejecting these lower prices. It's almost like, well, all systems go, right? Well, where'd it go? Went nowhere, right? Just went up 3 ticks past the previous bar. Then the next 2 bars, top of them, single print, small print of 3, small print of 4. Right? You come down, look at this, right? It's for most people, they're going to be, well, I'm not sure about it because, we came down, we opened up, it's a red candle, we traded lower, came back up. Next bar, same thing. We opened up, traded down, made, a big down wick, came back up. For most people, that's a sign of price rejection to the downside. But what's the order flow is telling you, there's actually price rejection at the top of these bars, right? Right here and right here. And then the next bar, boom, down. And then you break out of that sideways action and you trade, lower from, the mid 90s down into the mid 80s. But, if you're just looking at the candlesticks, you're thinking, well, hey, these are actually bullish looking candlesticks. But if you're looking at the order flow, you can see that there's price rejection in these bullish candlesticks. Now, this afternoon, or this morning rather, right, we had a big, just before 1040, a big burst of selling, right, came in, then just went sideways. Okay, the market's catching its breath. Well, which way are we going to go? Well, the sign was here with the single print, one, right? What's happening? Market opens up, pushes down, comes back up. Market opens up, pushes down, comes back up, goes higher, comes back. Next bar opens up, comes back down, trades one contract, one, right? That's not your normal order flow, right? You should be looking at order flow, double digits, 34, 37, 59, 40, 10, 67, 32, 11, bigger numbers, right? Instead, you're getting one contract, one contract, one contract, but you're getting it right before that big move up from, the 2980 area up to 2985 in that 1 minute bar, right? Imagine you're getting long off this, once this bar closes, you're getting long here, 2980. You got to stop where? 78 and a half. You're risking what, a point and a half for what? The potential. It moved, jumped up 5 points right there. Now, again, euro currency, right? You get up to a swing high, small print, small print, small print, small print. There's a couple more small prints here. I mean, there's a bullish one here, 9, but okay. You're not going to just throw all this bearish news out because you got one green candle with a small print, but it comes right back with a bearish small print here. Stack selling imbalance, obviously, and the market, quickly moved down, um, you know, 10 full points, 20 ticks there. Now, people say, well, yeah, that's well and good, but how, I don't trade euro currency. I don't trade e-minis. I trade 10 years, right? I'm a dome trader. I scalp a couple ticks here or there, but I trade big size. Now, 10 years is a contract that trades big size. Okay, so when you see small prints, in the 10 years, you really got to pay attention to them because normally at each price level, 10 years trade, what, 1,000, a couple thousand contracts at each price level. You can see here, there's some volumes, this is a 4 range chart. This is 10,000 contracts, 12,000, there's 2,000, 5,000. You got two here, right? You hit your low, bounce up a little bit, come back down, try to test that low, tests the low, but you're running into a bullish prominent point of control, and you only trade two contracts. And then look, the rest of the day, boom, just straight up. This is, I don't want to say gold, but this is information for a lot of people that trade markets that don't really understand how to apply volume. And again, it's nothing fancy. You just want to be alerted, to what's happening in the market. So let's talk about the tools to use to see the order flow. Now, when I first started trading, and when a lot of other traders started trading, being complete newbies, we all start at the same level. Normal candlestick charts, right? We all buy the books, the Nissan books, those big books that you want to put on your coffee table. Look at me, I'm a trader. I could read candlestick patterns. So I got doji here. I got a bullish single here, etc. But you're not really understanding what's happening in the market. Right? You're just looking at a chart and don't really understand the underlying forces in the market because you're missing out the most important piece of market analysis, and that's volume. Okay, so you can see here, right? You got this nice stack selling imbalance. You got a little bit of sweeping activity going on in here, right as the market sells off from the 06, 07 area down into the 96, 97 area. And again, if you're looking at a normal candlestick chart, this is where it happened right here. Okay, but if you're looking at this, there's no big solid reason to want to get short here, right? I got red candles, I got green candles. What do I do? But if you're looking at the volume, what's happening in the order flow, it's going to give you a lot clearer signs. Now, everyone talks about having an edge in trading, and that's really how you become successful, right? Just like, Formula One cars, right? If it's a wet track, you want to use a particular tire, right? Because it's going to help you grip the racetrack. But if it's not going to rain and you put your tires on, well, those tires aren't going to last very long. And instead of giving you an edge, it's going to, be basically an anchor for you. And, that's why I love order flow. That's why I keep telling people, try order flow. And the difference between order flow and looking at a normal candlestick chart is by analyzing the volume, because the volume gives you an edge over the rest of the traders because they're neglecting it and they're treating all prices traded as the same. And as you can see, right, not all prices are the same, right? Some prices you trade a lot of volume, right? Other prices you trade thin volume, and that's important, right? And the thing with order flow is there's so many edges in order flow if you know what to look for, or you have software that's going to highlight it for you. And that's why I created my software, because I wanted something that's going to tell me, hey, you know what? There's resistance up here, right? Rather than just, oh, I got a red candle here. Okay, well, maybe I should get short. Well, why don't I get short on any of these other red candles? Well, this one is telling me this is what I call a prominent point of control. That's why it's colored magenta, because it's telling me there's resistance in the market in this bar. And as you can see, the next bar, right, we opened up at 12. We traded up to where? Right to that point of control. Came off a little bit more, got within one tick of that area before selling off more. Now, this one is the E-minis again this morning, right? Having software that helps you with your analysis so that you can put it in context with what's happening in the market is going to put you ahead of a lot of other traders. Now, this market rallied 10 points this morning. This is from basically the 93 area all the way up above 3,000. And you're selling off, selling off, selling off, and then it turns around, goes back up. Okay, but people will say, well, you got to buy the breakout of the swing, this lower high. Well, why wait? Let the order flow tell you what's going on. And I talked about imbalances before. Here you got a buying imbalance, buying imbalance, buying imbalance, buying imbalance. Now, it's not a stacked buying imbalance, right, which I've shown you before, which has the imbalances stacked neatly on top of each other. Here they're spread out. You got 1, 2, 3, 4. But it's coming in right after this low is made, okay? And that's important, right? That's important information, because you know that after we came into this low, right, what's happened as the market's going down? Well, everyone is selling. But you get to a point where it's so cheap that buyers are attracted, right? Buyers are coming into the market now. And when buyers find something cheap, what do? They get aggressive, right? You go to Walmart to buy something and it's on sale, you probably buy more, right? Whether there's toilet paper or whatever, because you know that, well, I think this, S&P's, I could buy it down here at 90, 92, 93. I think it's, worth 3,000. So this is the information. This is what a multiple imbalance bar looks like, right? The software can put a circle, not a circle, what do you call it, a box around it. So the settings, right? Most people have an order flow software on their trading software. They don't know how to use it because it's so plain, right? It's so generic, right? You should look at your software. Does it show divergences? Does it show imbalance reversals in the order flow? Does it show multiple points of controls in a bar? I haven't even talked about multiple point of controls. If not, it's time for you to upgrade. Does your software show prominent points of control, right? Which I just showed you, right? That that red point of control? Does it show small prints, which I showed you earlier? If not, it's time to upgrade yourself as a trader, right? Does your software show unfinished business? Does it show volume imbalance? Does it show multiple imbalances, right? I just showed you the multiple imbalance at a swing low. Does it show volume profile? Does it show volume ratios? If not, you got to look to get software that's going to help you see what's happening in the market. And that's the reason I created the Orderflows Trader software, is because the software I was using before, which was considered advanced at the time, was just a footprint chart with very little features other than imbalances, deltas, and point of control. But I realized that you can take that information and extrapolate it further and make it mean something, right? The analysis I was doing for my own trading was taking the information in the footprint and putting it in context of the market. And I thought, shit, let the computer do that for me. That's why I created my own software. And why I ask you the question is, if your software has additional order flow analysis function. Most don't, right? And to me, that's the problem. Most people come to order flow, they look at it, I don't know what I'm looking at, forget it, and just throw it by the wayside. It's like the people that buy those big fancy DSLR cameras and put it in automatic mode, right? If you're going to spend $1,500 on a camera, learn how to use it rather than just use automatic. Just use your iPhone for that. And if you're looking at a candlestick chart, you're really limiting your view and you're making assumptions as what's happening right now in the market. So for example, right, why not give yourself an edge, right? So this is similar to what I was showing you before. All right, market sold off, right? And you get down to the swing low, you got the multiple buying imbalances coming in there, right? You got that sort of that magenta colored box drawn around the candle. People say, well, here you got bearish ones. You had a bearish one right before it. Okay, well, that's coming after a move down, right? You've already had your move down. What you're looking for now is, after you're coming down into a low, is there signs of life that this market's going to start to rally? One of the first signs of life is that you're going to start seeing aggressive buying coming in the form of buying imbalances, right? So the market just went sideways basically for 2 bars, then another bar with multiple buying imbalances. And this is those 2 bars, right? As the market started working its way back up. So, in life, just like trading, you're always looking for an edge, right? There's more to it than just being in the right place at the right time. Honestly, my brother is a very successful investment banker. And I used to always tell people, well, he got lucky. He was in the right place at the right time. He went to, he's actually in advertising before that. But he went to Northwestern Business School, and that's how he got into investment banking. And you say, well, if it's because of the school, etc. I was like, well, he put himself in the right place and he put himself so when the right time came along, but he did the analysis, right? Say, okay, well, if I want to be successful, all right, I gotta put myself in this place. I gotta be here at that time. And most people just think, well, I'm just going to get lucky and be at the right place at the right time. No, you got to do analysis to put yourself there. And the market's the same way, right? You need to be here in the middle of everything, right? So when the right opportunity comes, you're in the right place at the right time, and you did the right analysis. Now, this was this morning, right after the cash open in the S&Ps. Excuse me, this is a 1-minute chart, right? Selling off, come down here, start go sideways, hit the swing low, start going up, and then just going sideways. But what's the market telling you, right? You say, okay, well, I got a stack selling, a balance market should go lower, but it didn't. It went higher. Mike, order flow is for the birds. Well, again, take things what's in context of the market. Okay, yeah, I know I got aggressive selling, the market's going down, so I'm not really concerned with looking at a stack selling imbalance or multiple selling imbalances, at a swing low. I'd be looking at multiple buying imbalances off a swing low. But then, okay, I look at the other parts of the order flow. Well, I see the delta, 770, 108, 132, minus 102, minus 578, minus 1400, stack selling imbalance in here. Okay, do I think this market is getting ready to rally off this swing low? No. I could see delta is getting weaker. You had some strong buying right here, 770. Then the next bar, nothing, 108, 132. People are happy to transact here. People are just doing their trading down here. Maybe people are covering their shorts. Maybe there's a few more people getting short here as well. You got the small deltas, and then the selling sort of continues, right? It takes over, right? Because if there was strong aggressive buying, you wouldn't have delta of 108. You'd have 600, 700 in each of these bars. But with that buying, it's also attracting selling, right? And then by this bar here with the delta of minus 102, the sellers are back in control. Back in control in the next bar, minus 578. Then here, minus 1400. So it's jumped from minus 102 to minus 578. It's gone 5 times. Here it is 3 times as much, right? So you could be getting short here at, anywhere in this bar here between, gosh, I don't know, what is it, 06 all the way up to 08. And what happens, right? You know what happened, right? This was today. This is what happened, right? We sold off from the 06 area all the way down to the 96 area, pretty much straight down. Now people will say, well, Mike, why is this market going down on positive delta? Okay, I'll cover this I wasn't going to cover this here, but this was interesting because I do want to talk about it. Is you see buying imbalance, some buying imbalances. Markets go down, right? Because earlier I said markets generally go up on positive delta. Here's a market going down on negative delta. It's sort of an advanced concept. I'll say concept, but an advanced thing in order flow is what you have is people buying the offers, right? So you have strong supply. It's being supplied here, right? There's just sort of this distribution. People with supply are selling out on the offer. They're not hitting the bids per se. If they were hitting the bids, that would count as -1 negative delta. So they're happy to offer it out here, offer it out here, offer it out here, offer it out here, right? That's causing the positive deltas in these bars because people they think, well, we hit this area here earlier at 08, okay, and some buying came in. Now we're back here at this 08, now we're at 06. People are saying, well, hey, I was buying it here at 08, I could buy it now at 06, right, in here. But there's supply, right? People are working offers. So what's happening is you have the aggressive buyers thinking, I was buying it here at 08, now I could buy it at 06, it's a little cheaper, but the supply is hidden in here. You can't see it. You can see it in the delta. That's why you got the positive deltas, right? So the aggressive buyers buy it, and they get tired. They stop buying, let the market breathe, comes off some more. And now I can buy it at 02, right? So they tried buying it at 02, at 01, 02, and then they realize they're not going higher. They'll let it rest. They're buying some more. And then the markets just continue on down. Once that buying is removed from the market, because that aggressive buying was met with strong passive selling. That's why this market went down on the positive delta. So lastly, how can you as the retail trader take advantage of this unusual order flow activity? Well, you got to understand the delta, the imbalance, point of control, how to put it together. And the underlying commonality is they each take into account the volume traded, right? I hear people talk about certain things. It just makes me cringe. People say, well, you got to ignore the wicks, and candlesticks, if you're drawing lines or stuff, because, it's just a probe up there. Well, it's not. You can see here, right? Look at this green candle. You get the point of control basically right up here at the top. Earlier you had another green candle, point of control right up at the top. All the volume's happening up here, right? And people say, well, yeah, we went up there, we rejected that price. Well, no, we rejected this price because there was strong selling up in here, right? There was strong offers, 310, 416, 400. When it was bid here, they sold all the 224, this 176, the 175, right? That's bearish. This is bearish right here. 659, 451, 648, 390. So when this market was bid at 12 and a quarter, it was a strong bid, but there was strong selling into that bid. If I can give you one piece of tip, don't ignore the wicks, right? Look at the volume that's transacted in the wicks. It's very revealing to what's happening. So here's the market, right? This is E-minis again this morning. Look at the price rejection. Look at the small prints here, okay? But the market, so you're expecting the market to go up, but it doesn't. It just hangs there. And you got the small print here, as the market is going lower, small print here, and it just works its way down. You're seeing price rejection. Now, what's happening here? This is, again, this morning about 9, right? Market is working its way up. You got some very aggressive buying, three buying imbalances here, 3 buying imbalances here. Then the market just goes sideways. You get up here to the swing high, right? Delta of 3. Volume for the bar is 4,000. So it's healthy, right? It's not like 200, it's 4,000. So it's telling me right now this market is getting to a level where people are happy to transact. So if you get to a level where people are happy to transact, once they're done transacting, market's going to find that next level where people are happy to transact. So what am I going to look at? I'm going to look at points of control. Okay, well, I see points of control. The next 2 bars are starting, are almost the same level. It's 1 tick lower, but they are 1 tick lower. I'll wait till the next bar. Point of control, 1 tick, 2 ticks, 3 ticks lower than these 2 here. So I know that the market is now starting to find value at lower levels. I can see the delta is consistently negative 270, negative 270, negative 262, negative 270. Okay, so if I was looking to trade, I'd be looking to trade it on the short side. And what happens? Boom, next bar opens up around the 99 area. Boom, next 2 bars, 3 bars trades down to the 93 area. A quick 3-minute move, a quick 7 points rather, not ticks. Now, as a trader, right, anytime a market hits a swing high or swing low, you should be watching what's happening in the order flow, in the volume, specifically in the order flow. And I talked about prominent points of control earlier, right? The bearish one here and the bullish one here. Okay, so you have your bearish point of control here. Market comes off, starts probing a little bit lower, sort of works its way back up, to this prominent point of control. And then it comes back down, in the next bar. Next bar does get up through it, a couple of ticks through it, and it does violate it. Maybe you're thinking, well, this market's going higher now. Then the aggressive selling comes in, selling, imbalance, selling, imbalance, selling, imbalance. You got multiple selling imbalances here. You come in, next bar opens up, trades lower, puts in all this volume here, at a level lower than, anywhere the last 5, 6, 7 bars. You got a bullish prominent point of control there. You've got buying imbalance, buying imbalance, buying imbalance. So, what was potentially bearish earlier is now flipped, right? It's bullish. So if you get long, right, you're getting long in the next bar, around the 77 area, right? It starts working its way up, comes back down here, it gets down to 76, it's a point against you. But more importantly, right, when you take a step back and you sort of look at sort of the bigger picture, a lot of people try to look at just what's happening right in front of the dashboard, but in the bigger picture, right, we had a swing low, market's rallying up, get a pullback, and in this pullback, this is that green bar where you had the point of control that mattered right down in here, right? It's coming into an area where it's met support on a move up, right? If you're seeing support coming in on a move up, that's bullish, right? You're getting long at 77. Next thing you know, in the next 20 minutes, you're trading above 80, into the mid 80s, 85s. Now, one of my favorite trades is the small print at highs or lows. Highs or lows of the day are fantastic, but they could be swing highs or swing lows. This is the euro currency this morning, about 4 o'clock this morning. And this was the low of the day. We put in a small print here, 9. It's a 5-minute chart on the euro currency. And over the next 1, 2, 3, 4 bars, this bar here actually made a new high or traded up to the high. And obviously the next bar, we just kept going higher. So imagine, you're buying it in here. The low of the day is, what is that? 109.30, I forgot what that was, 37.5. You're buying it, around what, 42? Your stop is just right below this small print right here. right? And then boom, it goes literally from the low of the day all the way up to the high of the day and to new highs in the next 15, 20 minutes. Now, looking at just a plain candlestick chart, this is where I get into a lot of trouble as a trader, is sometimes, I just look at candlestick charts and, after if I'm having a good day, I get lazy. And I used to take a lot of poor trades on candlestick charts, and I still do. Sometimes, you get lured, and myself, I've been trading so long. My background, I did study candlestick charts for many years, so there's certain patterns that I look for. But when I added order flow to the candlesticks, it really gave me insight into the market. So out of all that activity, this was the one place to take a trade right here. I can make an argument to take this trade, but I probably wouldn't have because it's just such a big bar. I don't like to get short off of big bars. But yeah, and it's got a big strong negative delta. So, at some point I'd be looking for a little bit of a pullback. And then I get it here, right? I get a bar. I got a single print 5 at the top of the bar. I got 1, 2, 3, 4, 5 selling imbalances. Okay, I see point of control. It's a little bit lower. Okay, it's to be expected. You got a red candle, so I'd expect point of control to be down. Strong negative delta. You see, and this is right before the cash open this morning. This is trading when we're trading around the 30, 20 area. All right, then boom, cash opens, and then this bar here, 2 bars later, and we just drop like a rock. But if I was looking at a candlestick chart, it's easy to see when you see a big bar like that, I got to get short. But then you get short, what happens? You pull back into it. But this is that bar with the order flow that was very bearish, right? So you get short, okay, fine, get short here. Now I know where my stop's going to be right here. If I'm getting short off this big candlestick chart, I say, I don't want to put a stop way up at the top here. I want to, sort of control it. But here, I know I got, my point of control sort of right here. I've got the imbalances. I got something to hide behind, right? And then boom, the market sells off very quickly, very dramatically, right here. So I've got a few things going on in the order flow with the small print, with the multiple selling imbalances, obviously with the negative deltas getting stronger. You can see the deltas here kind of weakening, 284, then 162. So order flow analysis provides the trader the kind of advanced information they need to get an edge over other traders by being able to uncover trading opportunities the other traders just don't see. And I started out saying these are unusual, but it's unusual for people that don't understand order flow. And that's what's going to give you an edge over them. It allows you to not overcomplicate trading, right? You got to trade what you see happening right in front of you. And more importantly, you trade based on market generated information that basically other traders are ignoring. Now, one of my favorite quotes, Johnny Carson. Kids nowadays don't know who Johnny Carson is, but talent alone won't make you a success. Neither will being in the right place at the right time unless you are ready. So the most important question to ask is, are you ready? And if you're ready, you want to add order flow analysis to your trading, you've come to the right place. Now, there's 2 ways you can do it, right? You could spend a year or longer looking at a screen trying to figure it out. I've talked to a lot of people who said, Mike, I've been trying to figure out order flow for the last 5 years. I just don't understand it. Can you help me? Yeah, I can. Don't waste a year or more losing money trading. Now, that's the worst. I don't know what's worse, wasting your time trying to figure it out on your own or wasting your money trading trying to figure it out on your own. You can spend a lot of time sim trading, but if you open an account now, you got micros you can trade. So the cost of education, real-time education, is a lot cheaper. But the last thing, I don't know what's worse, spending a lot of time and not figuring it out, or losing a lot of money not figuring it out. At the end of the day, it makes you want to do this. I hate to say it, but a lot of traders just get frustrated at the market. Now, again, if you want to do it the free way, subscribe to my YouTube channel, youtube.com/orderflows. There's a ton of free information on there. I've got a couple hundred videos on there. I'm trying to get to 5,000 subscribers. I'm almost there. I need like 50 more. And get started there. That's a great place to start. Now, but if you want to, put it on a faster track, get the education and software from a trader who's successfully traded order flow at the highest level for decades. Skip the massive trading losses. Well, now with the micros, it's just trading losses. I wouldn't say massive. And more importantly, skip the wasted time trying to figure it out. You know, success, there's like a stair step to success, right? Learning, training, instruction, practice, right? And that's what I'm here to help provide you. Now, the Orderflows Trader software runs on Ninjatrader 8. It doesn't run on Thinkorswim. It doesn't run on TradeStation or Sierra Chart. It runs on Ninjatrader, and it'll run on the free version of Ninjatrader as well. So if you already have like another platform like Sierra Chart for your order entry, or another trading technologies, depending on who your broker is, you may already have a free platform, but probably doesn't have good enough order flow analysis software for you. You could download the free version in NinjaTrader 8 and run my software on it. And it's the volume footprint chart, which I showed you here, right? And it's got 7 pre-programmed order flow indicators. We're probably going to do a major upgrade this summer. Hopefully, I think it's probably going to happen in the fall now, where we're going to add a few more forms of analysis in the software for you. And the upgrade is free, right? I don't charge people for an upgrade for my software. Even people that had it for NinjaTrader 7 that want to upgrade to NinjaTrader 8, it's a free upgrade, right? Because I just want you to have good tools. And normally I sell it for $8.99, right? And I forgot to add, you get my chart template, so you can have your chart looking just like my chart now. That was the part that frustrates me on a lot of software out there, is they just download the software, very little documentation on how to get started. I got a lot of videos, how you install it, how to set up your chart from scratch if you want to, if you don't want to use my template. Because at the end of the day, I don't want to get a lot of questions from you saying, I don't understand this, that, because you're just going to get frustrated. I'm going to get frustrated. That's why I created a lot of training for you that you can get started easily. And the other thing is, having order flow software is one thing. You have to know how to use it, but more importantly, you have to know what to look for. So I don't just give you your software. Here's your software. Go figure it out. I provide a lot of training on how to read the order flow. And each week I do a private live group training session just for users, right? If you can't attend, you could watch the recordings, right? There's about 75 recordings, that you could go all watch them. I've got them on a page. There's some people out there, if they sell you software, then they sell you access to their trading room, right? $99 a month, $200 a month for what, a 1 hour a week? Here I do it for you for free. So if you got any questions, you could also, like say, Mike, I'm stuck on something on the order flow. On the session, that's where I am. You could reach me for sure on that session. You just go into the room at that time and ask your question. But I also give you other courses. You get my order flow trading course, which normally I sell it for $297. You're going to get it for free. It's 20 lessons, 15 hours of video instruction. Normally I sell it for $297. You're going to get it for free. Now, for a lot of traders nowadays, they've got some basic information on order flow, but they want to sort of take it to another level. And I also give access to the videos of my inner circle that I used to have. And there's 56 videos in there, and it's on advanced order flow tricks, tips, and analysis. Okay, so you start adding it up, right? You get the order flow software for $8.99, training for $297, access to the Inner Circle video series for $497. Plus, you get access. You get live group training each week, and if you can't attend that, it's all recorded for you. But I'm also giving you a special bonus, right? I mean, I just want people to get order flow, period. That's why I give out these courses when you get my software. The order flow playbook, which is, one of the courses I created, which, is actually one of my favorite courses because, I had a lot of fun making it, in the sense that it really helped me put down a lot of my thoughts and trade setups, in an easy to read format for traders. So you add that order flow playbook. I sell that. You can buy that now on my website for $297, right? So you add it up, the software, all the training, the live group training session. That's at least $2,000. But again, I don't want you to pay that. I understand. We're in a time of COVID-19, and a lot of people are struggling to make ends meet, and I got a special offer for you. So again, when I created the Orderflows Trader, my goal was to create a better tool for analyzing the order flow than already was being done, already all the software that was out there. And I have this picture, I laugh when I see this picture, except no imposters, is because when I started releasing my software years ago, I saw a lot of my users would come to me like a few months later saying, oh, this software is adding what you have on your software. This other software is also trying to add it. You go to Sierra Charts, you can read through the chat board. There's people always asking, hey, can you add this? Which is one of my indicators. Can you add that into Sierra Charts? But the thing is, if you don't know how to apply it, it's not going to be very useful to you. Okay, and that's why I have the training, so you could understand what you're looking at, right? And this is what other people say. Sheila says, your order flow software is remarkably helpful because I can clearly see now what's happening in the market. Like, for example, who's in control of the market on a very specific time and who's getting weaker as well. Other comments. Um, I took your course alone 1 month ago, and you give a really fresh and sane air in the field. Very impressive. If you really want to trade properly and understand what on earth is happening in any markets, order flow is the path forward. In Mike's experience and explanation, it clicks. So, to be successful, it's there. You got to go get it, right? It's just not going to magically fall in your lap. So if you're interested in what I have, with my software, with my training, for this time, this time of COVID-19, I got a special offer. $675, you get the order flow software, you get the Orderflows playbook, you get access to the Inner Circle video series, you get access to the Orderflow trading course, you get access to the weekly live group training sessions for just a one-time payment of $675. It's not a monthly thing. I don't keep coming after you each month. Give me $100 or whatever. No, it's $675, and it's going to give you a great education and software to use for trading. Now you will have to obviously pay data fees and Ninjatrader fees if you're going to trade through Ninjatrader. But your basic payment is $675. So what you do is you go to orderflows.com/of2.html, and you're going to see this page here, okay? And on this page, you scroll down. There's a lot of videos on there and examples of trades, but you go down to the bottom of the page, okay? And it says what you're going to get here, right? And you just click this button, buy now. I want this. I want to get started, Mike. And it takes you to PayPal. I don't process your payment information. I don't get your credit card information. I don't want to deal with that stuff. It's all handled through PayPal. Most people are familiar with PayPal. It's safe, it's secure. It's been around for a lot of time, for many years. And you don't need a PayPal account. You can just click here, pay with a debit card or credit card as well. So it's simple. Just go to orderflows.com/oft2.html. Now, if you want to get my book, okay, go to orderflows.com/book.html, and it's going to you have to enter your name and email address and hit submit. Okay, and it's going to take you to the page where you can download the book to your computer, to your phone, or to your tablet. And if you want to print it up, you're free to print it up. It's a great book. It's a great resource for traders that are interested in getting started in order flow, or people that are already familiar with order flow, want to sort of expand their knowledge a bit. Now, earlier I was talking about my YouTube channel, and I can't stress this enough. I put videos up every so often, and I've got a lot of videos up there, because a lot of people ask me, hey, Mike, can I use order flow with Forex? Can I use order flow with, Indian stocks and stuff? And I cover a lot of that stuff in videos. So you're probably going to find, a lot of your questions answered already in there. But if you just want to learn more general stuff about order flow, it's a great place to start. It's a great resource. And if you subscribe, every time I post a new video, you'll be alerted to when it's posted. So again, get started. Go to orderflows.com/oft2. And thank you for presenting. I'll just real quick, I'll see if there's any questions I could get to. Okay, I don't see any questions. So, you know what? I'll end it there for today. So, everyone, I said again, education is free. And in the sense that, once you get it, it's with you for life. People I know a lot of people that get into trouble for a lot of things in life. And, the one thing, because people are always trying to, this is kind of I'm sort of going off topic, but, people, how to say it, the one thing you can't take away from you is your education, things that you know. You could lose everything. You could lose your house to a fire or a flood. You could get thrown in jail. You could lose your legs, but they can't take information out of your brain. So, once you learn something, that's information you can take with you for the rest of your life and hopefully make money with it. In the sense that you can apply it to the markets or, whatever you do in life. So, again, thanks for watching this presentation. Thanks for taking the time out. And again, it's already summertime coming up. It's the last week of May. So, it's a great time to get started. If you haven't got started already in your trading education, now is a great time. So thanks, everybody. Have a great day, and bye-bye.